Yeah, it's gone.
Hey, hey. Alrighty. Good morning, everyone. How's it going? Hope we're doing all right. How are you doing?
Good, not bad, man. I mean, the day is pretty much done early, so can't complain whenever you have days like that.
Yeah, this is the dream, isn't it, of trading, right? Get that one trade off before market opens. Make your money and
Yeah,
then go about your day. Go and enjoy your coffee and read a book or whatever. Um,
yeah. Go have some fun adventures.
yeah, yeah, exactly. So yeah, morning, everyone. So this morning's going to be a little bit different. There's really not going to be much to talk about in the way of a plan, obviously, unless we get a big sell-off. For me, I'm kind of one and done, and I'm done with any further trades in ES today, I suspect.
Yeah, I
Um,
mean, just to mention if anyone is interested or we do get a big sell-off, obviously now the current low of the day would be, something that'd be pretty interesting. So if
mhm.
anyone is wanting to set an alert or just, I wouldn't watch anything at this point because we're so off of it. But if you wanted to set an alert for a low of day for anyone to track, that would probably be the area at this point.
Yeah, so right around. Ooh, my computer's freezing up. Right around 53, I think. Yeah.
Yep.
So yeah, I guess I might set an alert there. We'll see. Um, Coming back up into the supply zone again. So keep tapping on it. We got kind of a higher fractal of acceptance going on up here at the 7,000 to maybe 7,007 level. So we'll see if we can push through this time or not. But yeah, maybe we can just talk through the trade. Tom had an interesting question in the Discord, so maybe we can talk around that a little bit. But relatively straightforward one. By the sounds of it, you guys were all trading this same level last night. I'm not sure what I was doing, but I wasn't on the charts. So for me, I was interested in getting a trade off this morning, and in general, this week's been pretty light for me. I just had a very small trade yesterday morning, so small that I kind of forgot that I even took it. So yeah, I was keen to engage. When I woke up first thing this morning, we checked price. I saw we put in a failed breakdown of the late day low yesterday, which was down at 57, and I would have been keen to take that, but that was at 4:30 this morning or something for me, so I was well asleep. And then we'd run up a couple of levels, obviously poked above 70 at that point, and dipped. So I was kind of in this zone when I woke up, and I'm like, it doesn't really feel like one of those days where I woke up and checked price and we weren't too far from the level, so I just jumped in. Didn't really feel like that. We were kind of between the important level at 70 and the low of day yesterday at 57 to 60, we'll call it. So for me, it was just a case of waiting to see if we were going to poke back above 70, and fairly straightforward one, really. This is kind of type 1 acceptance, maybe a little bit of a hybrid because we did poke above and dip below, but I mean, I would probably class all this as type 1, but it's often the case where it's a blend perhaps. But obviously poked up to 70, dipped, poked back up again, tagged exactly, dipped again, and when we came up the third time, it was pretty straightforward. So I'm just trying to see what my exact entry time was. I haven't got it exact, but right around 8:14 Eastern time. I'm guessing you did something pretty similar because it's not too complicated, this one.
Yeah, I can tell you what time I got in. I got in 8:18. So just a few minutes after you. Yeah, I mean, nothing too complicated. I would be surprised. I mean, I woke up the same time Adam woke up today at 7:30 Eastern, and we were at like 67, which I don't suspect he would have taken that at 67, just 3 points below 70. I think at that point, my guess is, he probably saw the same thing, which is big shelf at 70. So you want to just let that clear. It just doesn't make sense longing a few points below there. So, yeah, I was just kind of waiting for 70 to clear. And, once we kind of cleared that, we already had some good acceptance there. So once we cleared it, it was just a pretty straightforward long. Obviously, it's a little, risky doing it before NFP. So, definitely you want to size down in those conditions. But, luckily it ended up running out pretty well. So that's the only thing, probably just size down if trading before for a catalyst, so you're not holding a massive position that could, swing the other way through a catalyst.
Yeah, I would say so. I think I actually made like 3 small errors on my trade. I'll be honest. So I mean, I'm fine with my entry. I think that was okay. But I didn't get the trim off pre NFP. So
I didn't either.
So in hindsight, having not taken a trim there, it was kind of, it's almost a crapshoot at that point, 50-50, whether it's going to pop this way or that way. So in hindsight, I think what I could have done 3 things differently at that point. After I hadn't gotten my trim, I could have probably tightened my stop because it was, more than likely going to blast 15 points one way or the other. And if it's blasting down, I might as well just take a 3, 5, whatever, 7 point stop, maybe under this rather than a larger stop. I actually had mine just under 60 from my initial entry. But if we're gonna blast straight down, there's no point me just eating more than 10 point stop on that. So I think I could have tightened my stop ahead of NFP. And then two, I think I could have extended my target for the exact same reasons. Like, it was more than likely going to rip 10, 15 points in one direction or the other. So I could have protected my downside and increased my upside. So there's a kind of two things that are going in my journal personally for things to think about, specifically I guess ahead of trading news events. So just some thoughts for me on that one. Yeah, other than that, so um, Tom had a question in the Discord, which I thought was a good question. So when do we apply the danger zone, and when do we not need to worry about it? Um, let me just kick that one over to you, and we'll kind of get into a chat around that. What are your thoughts?
Yeah, I mean, so it's, kind of an ongoing topic, it seems like, about the danger zone. So essentially the way you can think about it is, or at least the way I think about it, is there is always a danger zone, right? With any failed breakdown, I mean, the danger zone always exists. I mean, you can always kind of draw that box or keep that in mind. A few points above the low, there's always going to be a little bit of noise. And the reason for that noise, just like, if we're breaking it down fundamentally or technically, is because you have buyers and sellers that are heavily reacting in that area, right? Both buyers and sellers know that this is a big area, right? Sellers are obviously trying to back test that and try to sell for new lows, and buyers are trying to reclaim that area and trying to go higher. So there's just a lot of activity going on. And because there's so much activity going on, that area around the 5 points, it can be very noisy. So that's just something you always want to keep in mind, which is why you never want to just rush and just, if you see price go 1 point above, you don't just want to click enter, right? There's a whole process that you need to go through. And that process is acceptance. So, ideally what you're looking for is, you're looking for price action to show you that buyers are the one that control this area over sellers, and eventually that this price will get lifted because buyers are more control. So obviously, we have our type 1 and type 2 acceptance to be able to view this, right? That's what you're initially eyeing. Is you should always try to be eyeing for type 1 or type 2 acceptance. However, there are situations where we don't get that. And a couple of situations will usually be, one, if it's a super high volatile, thin tape, you know, price is just too strong and it just kind of zooms right past through the danger zone, then that's a good, time to apply NAP and just kind of wait a couple minutes to long. The other time to use it as well can be if we're just in a really, really low volatile chop where, essentially we're just kind of chopping around that 5 points above the low, and there isn't really any clear momentum. That's also another time to kind of just wait and wait for us to clear the danger zone, because then you'll kind of be able to enter hopefully on some better momentum out of it, rather than just getting caught in a bunch of chop few points around the low. So those are really the two times I look to apply NAP in the danger zone. But besides that, if we have type 1 or type 2 acceptance, that's always the preferred. The other thing I'll mention as well, if we have shallow sweeps, so anything I would say sub 2 points of a sweep, is what I would consider extremely shallow of a sweep, like a micro kind of sweep, then you kind of have to use NAP, because there just won't be enough room for much acceptance there because of how shallow the sweep was. So those are kind of the overall situations where, you really want to use NAP in the danger zone. However, I think Adam says this as well, quite a bit lately in the newsletter and the tweets, which is, if you also aren't too skilled yet at reading acceptance, then you can just default always use NAP and long above the danger zone. Like, if you just feel like, hey, my skill level right now isn't at a point where I can read acceptance, then, just take the higher entry. It'll oftentimes end up just being safer. The only time it won't work is if we just hit one level in reverse. But, again, it's a statistical deviation that may happen 10-15% of the time, but more often than not, failed breakdowns will run more than one level.
Yeah, and if we think about it in terms of, well, the three main criteria, I think if all of these, so the significant load, the structure we're trading around, the flush depth, and speed as well, and then the recovery, if these things are all like obvious and clear, very easy to identify on a higher time frame chart, so high, I mean 15-minute chart. If you can easily explain them to your grandmother, then probably means you don't need to worry about the danger zone. But if these are on the fringes, these things, particularly volatility and the acceptance, which is kind of the price action around the reclaim of the level, if those things are marginal, that's definitely where you want to consider it. So yeah, I think of, yeah, he talks about the normal distribution a lot, the normal distribution of how far failed breakdowns run. But in this idea, I'm trying to describe the normal distribution of the kind of the shape and the form of the failed breakdown. That's kind of in the sweet spot. It's all pretty obvious. Then I don't think you need to worry about it too much. Yeah, particularly if we've got a reasonable flush depth and good clear acceptance, and then some momentum when we push back up through. So yeah, that's a good question. Thanks for that, Tom. All right, so let's see. If anyone else has got any questions, put them in the chat. I know you guys are a little bit lagged on the stream there, or any comments. Feel free to put them out there. If anyone wants to jump on voice later and talk through anything, you think it's going to be a quiet day, although we never know. Could get a tweet that quickly dumps something. Could get some
I mean, overall,
geopolitics.
It's been overall pretty quiet week. I mean, and I think this kind of goes back to just similarly to the point we discussed earlier in the week. I can't remember if it was yesterday or Tuesday, about there's just certain times in the market where you play defense and certain times where you're on the offensive side, and this has just definitely been one of those weeks where it's just a defensive week. I mean, just after the massive run we had Thursday night into Friday, coming into the week off that massive 200-point leg into a pretty big supply zone, major kind of channel resistance area. And then, just not still able to put in any sort of real retrace. I mean, everything has been pretty much just consolidating and pretty shallow. I mean, even the dip yesterday was just 40 something point dip, which isn't really anything too crazy after a run up like this. So yeah, it's just one of those quieter weeks. And I think, for that reason, I was actually just thinking about this the other day, but trading is very weird in that sense, which is, you can kind of almost go from having days where you're just staring at the screen 6-8 hours, be setup after setup, and just so much activities. It feels like there's so much going on. It feels so hectic at times. And then you can go to days like this week where it's just like there's nothing to do. You're just kind of sitting on a runner. You're not really, there's not really much to do. Even there's not really any point of you even staring at the charts for hours a day because there's just not really much of your setup going on. So sometimes it can feel a little weird because it's just like, wait, I feel like this week I'm not working. Like, if I even look at myself, it's like this week, I already have 10 times better of a P&L than I did last week. But if you would have asked me on a pure just screen time and work basis, I put in 10 times the amount of screen time and work last week than I did this week. This week, I've taken 3 trades this week, and they've all been pretty small size. Besides that, I've barely been looking at what price has been doing intraday. But yet my P&L is on a way better area than it was last week when I was putting in 6, 7, 8 hours a day of screen time, constantly taking setups that appeared. Obviously, not like random setups, but my setups that adhere to my process. So, yeah, it's just one of those weird things, and it reminds you oftentimes that this isn't a paid by the hour profession, which I think a lot of times gets drilled into our brain by society and just obviously other work mechanisms, which is the more you work the better you earn, but it's not really the case here. And I think weeks like this definitely emphasize that again to me as well, where I'm just like, damn, okay, it's not a correlation of the more work I put in intraday is the more profits I'm going to get. Yeah, the more work you put in on the back end studying, of course, but the more you just stare at it doesn't really equate to much.
Yeah, it's not a pay by click activity. Perhaps the opposite. This is
Probably. I mean, yeah.
this is going to be extremely light week for me. I took like half a trade yesterday morning because I wasn't really in front of my screen properly. So that was in here, like smaller than my smallest size, and then I've taken this one today. So it's really 1.5 trades for me, and we're, you know, as far as I'm concerned, we're into Thursday already. You know, from a trading perspective. But yeah, it's nice. Kick back, do some journaling, do some studying, do some back testing, all that stuff. So might make for a quiet Discord today again, though. We'll see. We'll see.
Well, you know what? Honestly, I actually think, in some senses, I think that's a positive thing. It means no one's doing dumb stuff.
Yeah. Okay. Well, the market's about to open. I guess I'll go and watch that, and we'll catch you guys in the chat if something happens.
Alrighty, guys.
Yeah. Thanks for joining. Bye for now.